Once again, I welcome you all to the Lunch and Learn. My name is Dr. Carla Alcindor, and I am the Senior Director at the UST Max Center. UST Max is a micro-campus of the University of St. Thomas, Houston, which is located in the heart of Houston, and we're located right here in the heart of downtown Conroe. Our session today is being hosted by the Conroe Lake Commerce Chamber of Commerce, so thanks for being here. It's my pleasure to introduce to you today's speaker, Dr. Daniel Perez Liston. He is Associate Professor of Finance at the University of St. Thomas, Houston. Much of Perez's research focuses on how socially responsible investing influences both the price and volatility of publicly traded shares. Perez also conducts research in international finance, specifically portfolio flows to emerging markets. His research also examines how investor sentiment can influence stock market behavior. His research has been published in various peer-reviewed journals, such as Managerial Finance, Global Business and Finance Review, Banking and Finance Review, and the North American Journal of Finance and Banking Research. He has also presented his work at various national conferences, such as the Financial Management Association, Midwest Financial Association, Academy of Behavioral Finance and Economics, Academy of Economics and Finance, Academy of Financial Services, and Southwestern Finance Association meetings. Suffice it to say, we have the right guy here to talk about this aspect of finance. Dr. Perez received a PhD in finance in 2011, in addition to a bachelor's degree in finance and a master's degree in business administration from the University of Texas, Rio Grande Valley. He joined the UST faculty in 2014, where he teaches at the undergraduate and graduate levels, and of course, he teaches finance. Today, he is here to share his insights on cryptocurrency, what it is, and why should we care. Please join me in welcoming Dr. Daniel Perez Liston.
Thank you, Carla. Thank you. Thank you very much, everyone. Thank you, Carla, for your gracious presentation. Thank you, Brenda, for everything that you do with technology here and everything. I want to thank UST Max for hosting this event. I also want to thank the local Chamber of Commerce for hosting us here at the local chamber. And I also want to thank all of you, for taking the time to come in here and seeing this presentation. And hopefully we can, in an hour, we can cover some of the basics about, Bitcoin and cryptocurrencies, and maybe help, clarify some of the doubts or some of the questions that you have. My presentation today is scheduled to be an hour, and what I really want to do is I want to, do the presentation like 30, 40 minutes, and then have like some Q&A and make this more like a dynamic, kind of like informal type of presentation. So I really want to try and answer some of the questions and inform you guys in cryptocurrency. Of course, like Carla mentioned, I have a PhD in finance. I teach investments. I understand, the risks and the returns of different types of asset classes, whether it's stocks or bonds, financial derivatives and so on. I'm not like a super expert on Bitcoin, but I do understand financial assets. And for me, this is just another financial asset, okay? It's another financial instrument. So to me, this isn't, for some people, I think it's innovative in the sense of, the blockchain and, data mining. And we'll talk, about some of those things in a second, but really, to me, this is just like another investment opportunity, right? Whether it's, if you want to look at it as an investment or if you want to use it as a medium of exchange, as a currency. So the presentation, I guess, today is entitled, Cryptocurrency, what is it and why should we care, right? And I think the title of the presentation just pretty much tells you everything that we're going to talk about. Like I said, people still don't understand what cryptocurrency is. And then I think, why should we care? Well, I think we should care now because this market has developed into a $1 trillion market, right? A few years ago, I was interviewed on TV regarding this topic, and back then, really, the amount of money that was invested in cryptocurrency was actually relatively small, right? It was a small amount of money, maybe $100 million or $200 million. Now we're in the trillions of dollars, right? So I think now we're seeing a very large movement of money into these cryptocurrencies. So I think now we should care, okay? So that's why I gave the presentation the title that I gave it. So what is cryptocurrency, how to buy it, and should you invest in it, right? This is the outline of the presentation. So when you think about money, right, money has three different functions, right? Just generally speaking, money, right? Or a currency, right? One of the functions is a medium of exchange, right? Whenever we use our dollars or pesos or our, Japanese yen, it functions as a medium of exchange, right? I give you money, you give me a product, right? So that's one of the functions. The other one is a unit of account, right? Like we know that $10 is $10, right? We know that 20 is 20, right? Back in the day, when they used gold and stuff like that as a currency, it wasn't that hard to use, it wasn't that easy to use it as a currency because you had to cut the gold, right? And were you receiving the right amount of gold, right? These are some of the complications that we don't look at anymore. So as far as a unit of account, cryptocurrencies, function well as a unit of account. But the other one, and I think a very important one, is the store of value, right? A currency should have a store of value, right? For example, right now we're going through a really terrible situation with inflation in this country, and not just in this country, but worldwide, right? I just read an article that says that Germany has reported the highest rate of inflation that they've ever had, right? So why is inflation bad? Inflation is bad because it's eroding the store of value of your money, right? Your purchasing power, right? So the two things that I want to focus on today is Bitcoin. I'm going to mention Bitcoin a lot because it's the most dominant one, but really are cryptocurrencies a store of value, right? Can they store your value? And then are cryptocurrencies a medium of exchange? Can you use them to purchase, regular products? When I came over here, and I probably shouldn't be saying this, but I bought a Red Bull, right? So to get some energy and, come talk to you guys, right? And I used, dollars, right, to buy my Red Bull, but I couldn't have paid with cryptocurrency at that store. So as a medium of exchange, it's still not where it should be, right? So let's address these two issues for cryptocurrencies individually. So as a store of value, I think right now you can make an argument that maybe it is storing value, right? But cryptocurrencies have very large fluctuations, okay? So if you think of a traditional currency like the U.S. dollars, the movements of U.S. dollars or the euro or the British pound, the movements every day are small, incredibly small. The percentage changes in a year are extremely small, right? So, for example, for the U.S. dollar to appreciate 10% against other currencies is a big number, right? A 10% movement would be an extremely big movement for the U.S. dollar. But for cryptocurrencies, you can have a 10% movement in a day, right? So if you think of storing value, right? For example, if you think of grabbing $100,000 and storing it, right, in cryptocurrency, and then you see that erosion of 10% in a day, which would be $10,000, that's a pretty dramatic movement, right? So as a store of value in that sense, I think it's still not where it should be as a regular currency, if you think of a currency, right? And then if you think of as a medium of exchange, I think the medium of exchange is actually kind of worse. I think most private enterprises do not accept cryptocurrencies as a form of payment. Now, more and more companies are accepting cryptocurrencies as a form of payment. I mean, that is true. Like over the years, I think we've seen like a large group of companies starting to adopt and accept cryptocurrency as a form of payment. But it's still not sufficient. Like I couldn't have bought that Red Bull today with cryptocurrency, right? So I think as a unit of account, that's fine. There's a numerical value there for cryptocurrency. But as a store of value, I think it's kind of hard to make the case that you can park your money there and just be safe with it, right? whereas you can park your money in the US dollar and be sure that there's going to be small movements over time, right? That your money's going to be relatively safe. So I think as a store of value, it's not like such a good idea yet, right? It's still pretty risky. And when you talk about as a medium of exchange, it's still not where it should be. It's still increasing, right? So more and more companies are adopting it. So I think in those two areas, which are very important areas, when it comes to a currency, right? Cryptocurrencies aren't where they're supposed to be. So I guess basically what I'm telling you is that it's still not a currency, right? Because a currency needs to have those three functions. It needs to have a store of value, medium of exchange, and then a unit of account. And in those two critical areas, I think it's still not where it's supposed to be. So I wouldn't think of cryptocurrency as a currency per se, right? It's not a currency really. One day it could become a currency, but it's not a currency right now. So I would think of it more as an investment, if you ask me, right? So we need to think of cryptocurrency more as an investment right now. Now, when you talk about cryptocurrencies, I guess the main innovation of cryptocurrencies is that it's decentralized, right? It's not controlled by a central bank. When you think of our US dollar is basically controlled by the Federal Reserve System, right? So when there's a recession, the Federal Reserve increases the money supply, right, to kind of offset some of the effects of the recession. With cryptocurrency, it's decentralized. There is no central bank. There is no US central bank controlling the supply of Bitcoins. There is no bank in Japan controlling the supply of Bitcoins and so on, right? So the supply in that sense is limited, and it doesn't really act like a traditional currency would, right? So that's the innovation, right? So in that sense, I would still hesitate to call it currency, right? But the main innovation is this, notion that it's decentralized, right? Like it's the people's money, right? Now, please don't be confused. There's a little bit of confusion with cryptocurrency, right? Kind of like Bitcoin and Dogecoin and these other cryptocurrencies, and there's a large list of them. And then there's something else called digital currency issued by a central bank, right? So the US federal government is looking at options at maybe issuing digital currency that's US dollars in digital currency. That's totally separate than cryptocurrency. That's a different thing. Because why is it different? Well, it's different because it would be issued by the US central bank or the Federal Reserve System, right? It would be backed by the US federal government. Cryptocurrency is not backed by any government. So it's different. So some of the things, on the PowerPoint I already talked about. So there's different types of cryptocurrencies, and I just want to illustrate these right here. Just to show you, there's all these different cryptocurrencies. But of course, the most popular one or the most famous one is Bitcoin, right? And then there's Ethereum, Tether, there's a whole bunch of them that you probably haven't even heard of, like Terra. But I think if I were considering investing in a cryptocurrency, one of the important things that I would look at if I were an investor is to look at the market capitalization, right? Because usually investments that have larger market capitalizations are more stable investments, okay? And if you look at the market capitalization, and if my eyes, are good enough to read that, it's like $750 billion in Bitcoin. $750 billion in Bitcoin are invested right now. Okay, so just to give you an idea of how much money that is, the Texas economy, right? The GDP of the Texas economy is roughly 1.5 trillion a year. So it's roughly like the size, like half the size of the Texas economy. That's a serious amount of money being invested in Bitcoin, right? And then of course this is all over the world. So if I were an investor, I would look at market capitalization, make sure that I invest in cryptocurrencies that everybody's investing in. And right now you want to like avoid, kind of like scams and stuff like that, because there's a lot of these like smaller cryptocurrencies that don't have large market capitalizations that could go under, fairly quickly. So I would focus on investing on the ones that are more popular, that have larger market capitalizations. So how to buy it, right? I mean, now it's actually pretty easy to buy Bitcoin, right? And I gave you a screenshot of my Cash App, right? So I have this like Cash App. It's an application, kind of like PayPal or something like that. And what you end up doing is you just have to like download this Cash App, right? This application. You link it to your bank account, right? If you have Bank of America or Chase or whatever bank you have, you link it to your bank account, and then you just click purchase Bitcoin, and that's it. You bought it. It's yours, right? It's that simple, right? So for example, just as an exercise, I bought with the Cash App $10, right? And it shows you the value of my $10, how it's gone up and down over time, right? And you can see how the movements are relatively large, right? But so far I'm making money off of my $10, right? 44 cents. Not like, but it's that simple. I think purchasing it is very easy now, right? You just download an app, link it to your bank account, click, purchase Bitcoin, and that's it. You own Bitcoin. That simple, right? So it's not easy. And I think if you want to do it just as an exercise, right? Just as okay, I did it, right? I think it would be like a useful thing to do. But of course, make sure that you do it in applications that are reputable, right? Like, purchase through applications that are reputable, that are backed by serious, institutions. Don't go put your money where these like weird, applications or something. So this one's pretty reputable. So Cash App. And then, just real quick, there's this, you might be thinking like, who invented Bitcoin, right? And the first Bitcoin was issued by Satoshi Nakamoto, right? He's a legend or something, but nobody knows who this person is, right? So yeah, somehow they invented it and we don't know who it is. But I guess I want to backtrack just a little bit with cryptocurrency. And like you have your US dollar bill, right? You have like $1 bill in your wallet, right? You know it's there, you can see it, you can touch it, right, and everything. But there's also like another important thing that you can't do. You can't easily forfeit the currency, right? You can't easily make a fake dollar bill, right? There's all these different protections, right, in the dollar bill, right? Like these little bars and these little watermarks and all these different things on the dollar bill, right? So you can't like counterfeit it very easily. So the counterfeiting part in Bitcoin or cryptocurrencies is through the blockchain, right? So this like, computer science type of thing, algorithms and blockchain. The blockchain is what protects you from counterfeiting Bitcoins. Does that make sense? And one of the things that I was telling some of the folks here is, I don't want you guys to get caught up exactly on how is the Bitcoin created, right? Like mathematically and computer-wise, like how is it created, right? Or how does the blockchain exactly work, right? I think those questions are more like computer science type questions, and I think they really don't add value to you, right? Like, there's no real value if you know how the blockchain works, right? It doesn't matter, right? Just like there's no value, it's just like a black box, right? You don't need to know how the black box works. Just like when you go deposit, $100 in your bank account, do you know how the bank stores the debits and the credits and everything in the computer system? You don't. You don't know how that works, right? You don't care. But what you do care is that when you go get the money, it's there, right? So you do care about that. So I think don't obsess over the, how the blockchain works and if there's like mining of Bitcoins, right, where you can mine them and actually extract them. Like all these things are more like computer science type of things that I think don't add value. But in this presentation, I think what does add value is understanding the return, right, of the Bitcoin. Understanding the risks of the Bitcoin, right, or a cryptocurrency. Understanding the correlations of Bitcoin or a cryptocurrency with other assets. That is actually like very useful information. More useful than knowing exactly how the blockchain works, okay? So I don't want you to focus on that. Okay, so can you buy things? I already addressed this question a little bit. I think more and more you can buy things. I went with this website, right? And this website says like who accepts Bitcoin, right? And I think you can actually buy Starbucks with Bitcoin. And not necessarily buy it like go directly to Starbucks and say, here's my Bitcoin. But I think you can buy like kind of like gift cards, and then you can use the gift card to purchase, Starbucks. And then Microsoft, Microsoft takes Bitcoin and certain, cryptocurrencies. So more and more these like major corporations, PayPal, Starbucks, AT&T, Overstock, Twitch, like all these different corporations are, accepting cryptocurrencies as a form of payment. Again, but it's still not where it should be, right? 10 years from now, it might be a different story. 10 years from now, maybe you can go to the, gas station or grocery store and just pay with Bitcoin. But right now, we're still not there. So this is what I really want to focus on, because like I said, I don't see cryptocurrency as a currency per se yet, right? Because of the reasons I mentioned. But I do see it as an investment, right? It is an investment. So what I really want you to look at is like this graph, right? Looking at the returns. And Bitcoin is the solid blue line, right? If you look at the PowerPoint. And if you compare it, for example, to the S&P 500 or Google or Amazon or some of these other companies, you can see that it's done really well, right? The return has been insane, right? Way higher than anybody else, right? So for example, if you would have invested $1,000 in 2017, $1,000 right now, it would be worth $100,000. $100,000. $1,000 converted to $100,000. That's a ridiculous amount of return, right? So that's what I'm saying. Like, I think we need to understand the returns, the risks, and the correlations. Now, everybody likes to talk about return, right? But in finance, one of the pillars of finance is the return-risk relationship, right? That's like super important. And everybody loves to talk about returns, but they don't like to talk about the risks. So as you can see just with the graph, you can see that there's been a large degree of variation, right, over time. Even Bitcoin at the very beginning, your $1,000 in 2017 actually went below $1,000, right? It was the only one that actually went below, right, considerably below. But now it's kind of like exploded. So this graph, right, on the horizontal axis, you have risk, right? And we measure risk as standard deviation, right? That's just the risk. It's the standard deviation of the asset. And then on the vertical axis, you have the return of the asset. So basically, if you look at the green triangle, that's Bitcoin, right? So Bitcoin gave you an insane amount of return, but with an insane amount of risk. Right? It's way out there by itself, right? If you look at the S&P 500, that's in the red rectangle. The S&P 500 is in the red rectangle. It's a reasonable return, right? Below 20%, and with a risk of below 20% a year, right? So I guess as an investor, you have to like measure your level of risk aversion. Like, how okay are you with losing $10,000 in a day? Are you okay with that, right? Or are you going to stress out and then sell it, right? Right? So it's basically what I'm telling you is like cryptocurrencies aren't for the faint of heart, right? These are like pretty risky investments up there with. They're not in any, like if you look at all these stocks, right? Like look at the individual stocks like Netflix. The risk of cryptocurrency is way higher than Netflix of an individual stock. So it's not for the faint of heart. To me, the risk looks more like financial derivatives type of risk. Like calls and puts and stuff like that. It's pretty risky. So as an investment, I think you need to know this. Like everybody likes to talk about, oh, I made $20,000 on cryptocurrency. Yeah, but they didn't tell you that they were down $20,000, right? And then they were up $10,000, then they were down $30,000, and that roller coaster ride that they went through emotionally, they don't tell you about that, right? So those are some of the things. And before we go to the key takeaways, there's this professor that already did like a really nice job summarizing some of the main points and did some graphs, right? This professor, Dr. Forster, and I want to show you some of the graphs that he has, right? So I showed you this one, right? And a lot of this presentation is based on Dr. Forster's work. I showed you some of these already. Let me show you another one that you haven't seen. So look at this. So this is very important, right? So we already talked about the return. The return is extremely large, right? We talked about the risk. The risk is extremely large for cryptocurrencies, Bitcoin in particular. But we also need to look at it in terms of correlations with other asset classes, right? What are the correlations of Bitcoin with other asset classes? This is very important because whenever you invest, right, you invest in a portfolio type of sense, right? That's how we invest usually, right? You might own your house, you might have your retirement account. This is all a portfolio, right? So how is, what happens when you add Bitcoin to your portfolio, right? Is it something that's going to increase diversification and therefore benefit you? Or is it something that's already redundant, right? If you're adding Bitcoin, does it add anything in terms of like risk and return to your portfolio? So look at, this is the correlation coefficient, and some of you guys might have taken statistics like many years ago, but I just want to refresh you, like the correlation coefficient, right, measures the degree of how two variables are moving with each other, right? So for example, like how is the stock market, the S&P 500, moving with Bitcoin, right? If the S&P 500 goes up, does Bitcoin also go up, right? Or if the S&P 500 goes down, does Bitcoin also go down, right? So that's the correlation coefficient. And a positive correlation coefficient indicates that they're moving together, right? So straightforward. A negative correlation coefficient would tell you that they're moving opposite to each other, right? So a negative correlation would tell you that, Bitcoin goes up, the stock market goes down, right? So that's a negative correlation. So this chart shows you the correlation coefficients with different asset classes that Bitcoin has, right? So the first bar, right, on the top is the correlation of Bitcoin with the stock market, with the S&P 500. And if you look at the correlation coefficient, it's positive. So that means that if the stock market goes up, Bitcoin is also going up most of the time. And the correlation is like a little bit below 0.15, right? A little bit below 0.15. So what does that mean? Is that a big correlation? Whenever two variables move perfectly together, the correlation coefficient is 1, right? So 1 is the largest number. So 0.15 is not a very large number, okay? It's not, so the degree of correlation of Bitcoin with the S&P 500 is not very large. It's actually quite small. And just as a point of reference, if you randomly grabbed or picked stocks in the stock market, they would have like a correlation on average of 30%, right? So any stock is like 30% correlated with another stock, right? So this is a pretty low degree of correlation, right? So that's kind of like a good news, because if you have your money invested in the stock market and you add Bitcoin to your portfolio, it's going to increase diversification, which is a good thing. If you think of 100% of your portfolio, it wouldn't be a good idea to put 90% of your money in Bitcoin, right? That would not be a good idea. Right? So maybe adding, Bitcoin or a cryptocurrency in moderate amounts to your portfolio, like maybe 5% or something like that. I mean, like 5, maximum 10% of your portfolio might be like a good idea. But moderate amounts because of the high risk that Bitcoin has. But the benefit would be this low correlation that it has with the stock market, okay? So this chart, it shows you the correlation with the dollar, right? Look, it's like inversely related to the dollar, right? When Bitcoin goes up, the dollar goes down. But that correlation is small, right? It's a negative, 0.7 or something like that. It's a small correlation, negative 0.07. And with gold, right? It's correlated positively with gold, right? So in that sense, I guess it's kind of like a safe type of asset. We always think of gold as as an inflation hedge, right? Or a safety type of asset. So in that sense, it's kind of moving like a safe asset. And then look at the correlations that it has with all these other technology companies. Again, the correlations are still low. So from an investment perspective, I would say that Bitcoin is, something that you should consider maybe adding to your portfolio, but in moderate amounts, okay? Don't go wild with with Bitcoin. Okay. So let me see how so that's important, super important, the correlation. And then here this graph just basically tells you that Bitcoin can actually have very extreme movements, either to the positive side or to the negative side, like very extreme movements. Maybe within a year you might see a 90% movement in either direction, right? Which would be really bad, right? So it just basically tells you that the risk is very high for this. You need to take that in mind, or keep that in mind. And then one of the major questions that we have right now when it comes to cryptocurrencies, and I think everyone should be concerned about this, is are we in a cryptocurrency bubble? From an investment standpoint, that's a very important question. And this chart shows you basically the NASDAQ back in the dot-com bubble era, right, which is the red line, and then the blue line, which is Bitcoin, right? So it's basically comparing the price appreciation of the NASDAQ back in the dot-com bubble to the price appreciation that we have right now in Bitcoin. So this chart would kind of tend to suggest that we are maybe in some kind of bubble, right, in cryptocurrencies. So that's important. Now, the bubble could burst, right? And then, cryptocurrencies can come down, but I don't think they'll disappear, right? That's not, I think just the way the NASDAQ didn't disappear, it just corrected, right? So I think probably the question are cryptocurrencies are going to stick around. I think they are going to stick around. I think that's already kind of answered. But can they come down in value? Are they too overbought right now? I think that's a reasonable question to ask. And with Bitcoin, I'm not exactly sure, and it's hard to tell when you're in a bubble, but some of these other smaller cryptocurrencies are definitely in bubbles, okay? So you need to stay away from some of the other smaller cryptocurrencies. And like I said, some of them aren't going to stick around. So I just as an investor, keeping that in mind, that maybe we could be in a bubble right now with cryptocurrency. So I guess I want to move to the Q&A section, but just to summarize, right? I mean, to summarize the presentation, is it a currency? No, not yet. It's not a currency, right? Because of the medium of exchange and store of value and all that. Is it an investment? Yes, for sure it's an investment, right? But what type of investment is it? It's a high-risk investment. If you want to invest in this, you need to take into account that it's a high-risk investment. As far as diversification, there are diversification benefits to adding cryptocurrency to your portfolio, but of course just adding it in small amounts. And then as far as purchasing it, like I mentioned, there's all these different apps like Cash App. It's very easy to purchase now cryptocurrency. Again, but you're purchasing it more in the sense of investing in it, right? Not necessarily. And of course, different brokerage accounts also let you invest in Bitcoin now, so you can also do that. But yeah, I guess that's pretty much the presentation, and I'll open up to some Q&A. Hopefully I can answer some of your questions. Yeah.
What are some of the root causes that we need to look for those large fluctuations of the expense of it that you were referring to?
Yeah, that's a very good question. I think why does Bitcoin move the way it moves? some of the factors driving, like for example, like when it comes to traditional currencies, right? We know that inflation is an important factor, right? We know that if a currency has a large degree of inflation, the value is going to go down. But with cryptocurrency, it's not exactly like that, right? So it's not like inflation is, affecting the value of Bitcoin. So some of the determinants or some of the factors that give value to cryptocurrency, I think, are not very well known right now. I think researchers like myself need to address what are the factors that are driving the value of Bitcoin. So I think in that sense, it's a very good question what you asked, but I think there's no clear answer right now.
Yeah, it's confusing because because I have family members that are young and they're smart and they do all this.
Yeah.
And they said it's so high risk because one moment it's here and the next moment. And I said, well, what's driving that?
Yeah.
It's like you're saying that there's no regulations, so we the human people, populace, are driving it, but how are we driving it?
Yeah.
I'm really confused, and you're the smart man.
Yeah. No, and one of the things about academics is that since I don't sell Bitcoin or anything to people, I'm not paid by anybody. I'm here to tell you the truth. That's it. I'm here to tell you the truth without any bias or anything. And to tell you the truth is that people don't know what the factors are that are driving the demand, right? So
it seems to me that it happens so quickly.
Yeah.
That I don't know how you would.
Yeah.
How would you track your forecasting?
Yeah.
It's not like when you see the movement in the economy, and you can make some assumptions about other investments. It happens so quickly with Bitcoin. I don't know how you can track it.
No, we don't understand the factors. Yeah, we don't know the factors very good that are driving this demand. But, for example, when you look at the value of Apple or something like that, it's driven by the profits of the company, right? You look at the profitability and that'll drive the stock price. But here it's not like that, So I think as researchers, we need to do a better job to understand what are the factors that are driving it. And one of my worries about, an overvaluation or a bubble in Bitcoin or some of these cryptocurrencies that I'm kind of concerned about is the degree of marketing involved now, right? If you see all these ads now, buy cryptocurrency, all these ads are everywhere now, right? I mean, on TV, everywhere. And that is concerning because that means that it could push people to buy something when maybe they really didn't have to buy it, right? And that can create a bubble, right?
And somebody's making money off that.
Yeah. Exactly. So I would kind of be concerned about the bubble aspect. Right now, Bitcoin is close to 40,000 or 40,000. I don't remember the exact number, but maybe it could drop to 20,000, and maybe it stabilizes at 20,000, right? That's a big drop. Or maybe it could go up, but just from my experience and what I've seen and the marketing that's involved, right? The degree of marketing that is being invested, I think that's probably pushing the price above a level where it should be. If its true level is 20,000 and it's at 40,000, maybe it's all that marketing that's creating some kind of bubble.
I work for a nonprofit myself, and we pay for certifications and trades for fathers. And some of the fathers that started coming through were were inquiring about certifications on cryptocurrency.
Yeah.
I said, not to my knowledge. And I said, but that was, and then this ran across me.
Yeah.
Well, take a look at it.
That's a good question. I haven't looked at the question as far as certifications. But would it be a certification in terms of the blockchain and all these things, which I think are not that relevant unless you're actually mining Bitcoins or something, or more I'm telling you, the risk profiles, right? For example, at the university, we've taught a couple of courses on cryptocurrency, an entire course. And I'm not the one that taught the class, but we've covered these things that I'm telling you, the risk profile and all these different things. So you could take, I think, entire courses on it. Yeah.
So a question for you. So you gave us the criteria for what makes crypto what makes a currency a currency. I'm not challenging academics at all, but I feel like we should add something to that. You know, being able to move crypto, like liquidating or selling it. You know,
liquidity,
Cash App first came out, and I was toying around with it, and I, you know, bought $5. As soon as I saw I lost $1, you know, I sold it.
Yeah.
You know, so the ability for us to be able to sell it back should be part of that criteria of making it currency. You know, because we can get from up under it, we can move it, we can push it around, you know. Now, if we were just stuck with it, then, you know. But I just think it should be a fourth criteria, which would be being able to move it, being able to liquidate it, being able to, for even the small amount of companies that are accepting it, that still should be in the definition or criteria for our currency.
Yeah, I mean, I agree. I think, I mean, those are the three criteria, right, that are widely accepted. But I think what you're talking about is liquidity, right? Being able to liquidate it. And liquidity is an important feature of investing, right? So that's an important feature. And I think in that sense, you know, it's probably getting easier and easier to liquidate, you know, your Bitcoins or cryptocurrencies. Whereas maybe, you know, 5 years ago, it would have been harder.
Yeah, what I'm having a tough time wrapping around my head is that when you invest in stocks, it's something hard. You know it exists, and you can always do the background checks on that corporation. You can see the financials, you can see everything about it. So that is tangible. I don't know how to wrap this around, because it seems like it's, like you said, it's in the air. It's like you say it's this much value, you say it's this much,
and that's how it works right now.
How do we grasp that?
Well, I agree with that, except with stocks to a large degree. It's the value that people believe they're worth. I know there's some financial numbers you look at, but I know Amazon comes in or Google comes in and meet their numbers, but the stock goes down.
Well, I'm saying those are tangible.
They generate,
Oh yeah, you can research it. There's nothing to research there. You're right.
So I don't know. I'm like, how do we figure that out?
Again, just, you know, finance, you know, people like me were like experts in valuation, right? And I hate to tell you, but it goes back to the law of supply and demand, right? And Bitcoin has like a relatively fixed supply, right? You can't change the supply too much. They do it through mining, but fixed supply is important. So the supply is relatively fixed. It's not fixed completely, but it's relatively fixed, right? And you can generate more Bitcoins, but not that much, okay?
Why can't you?
Just the way it's created, right, through the blockchain and everything. So
we have the authority to do that.
There's no authority. Like, you can actually buy a machine right now for $10,000 or $20,000 and start to mine Bitcoins and create Bitcoins. Like, anybody can do it. So anybody can do it, but the way that the system is designed, it makes it harder and harder and harder for that to happen, right? It's through solving these like puzzles or algorithms, right? And I don't want to go too much into detail on that, because that gets like more. but
that's how it works.
So the supply is relatively fixed. So the only thing that's really changing or driving the value is the demand side. And really, any asset, whether it's a house, you know, a bottle of water, like any asset, right? Our currency right now, our fiat currency, it's the demand that people give it, right? And if people right now want to buy cryptocurrency, then that's what's driving the value, right? And if tomorrow, for whatever reason, people change their mind and they're like, this is worthless, then it'll be worthless.
So it's like a pyramid scheme.
I mean, I wouldn't call it a pyramid scheme, but it's just, you know, if you think of the things that we've given value to over time, right? Like salt. Salt used to be super valuable, right? It's extremely expensive, you know, 400, 500, 600 years ago, right? You know, gold used to be worth nothing, right? And now it's worth a ton, right? Like, you know, over time, like, you know, humanity has given things value that maybe it wasn't really its intrinsic value, right? It was more driven by the demand of it, right? What people were giving it. So I think as long as people want to use Bitcoin, and now they're using it as an investment, right? and they want to keep making money, and we keep seeing like ads, to buy cryptocurrency, and then it'll keep going up.
Fidelity's letting you buy it in 401k,
Yeah.
which I think
Yeah.
is a little bad.
Yeah.
Because that's such a high risk
Yeah.
to put in front of people, for the
Yeah.
401ks. But
Yeah, I think.
That was the question I was just about to present, because I do see like those ads and commercials. I think it's a bank out there now saying that, hey, you can do IRA with crypto now.
Yeah.
And so, and that was one of the questions
Yeah.
I was gonna ask. I'm like, well,
Yeah.
because they sell it like, hey, you can avoid the taxes that, you're gonna be placing.
Yeah.
You had a traditional 401k, that 20%, if you withdraw too early.
Yeah.
Or the government, when you do retire, pull it out, you're still gonna get hit with that 20% regardless.
Yeah.
So it made it seem like that you can avoid all that. So
Yeah.
that was going to be like my question as far as like an investment tool. I mean, does that even seem sound right now? Or it's just,
I mean, like I said, I think if you're going to think of putting it like in your retirement account, I think it would have to be like very moderate amounts, like don't go crazy out there and put 30% of your money in, Bitcoin or anything like that. It's too risky.
Tightening up too, on
Yeah.
the gains that you're making, and they're tracking.
Yeah.
They're requiring some tracking on all that.
And that's one of the things that I mentioned because, and I'll get to it in a second, but one of the things that I was going to mention is, I think it was like 1 month ago or 2 months ago, I think it was President Biden that signed an executive order to study cryptocurrencies and digital currencies because it's starting to become like a systemic risk factor, right? Like it's something serious now. So right now the U.S. government is in the middle of doing a long-term study to see what the risks and benefits are to the economy. Like for example, like the question that you're asking, like is it healthy to put it in your retirement account, right? So they're going to study those kinds of things right now. They're in the middle of that.
What is the benefit for enterprises to have or to hold the Bitcoin? Because you mentioned some of them, so I don't know, do they just cash out that or they just keep some in the books? Or?
Yeah, I think, kind of like I mentioned, I mean, one of the benefits, of course, if you add forms of payment to your company, that's a good thing, right? Like you'll sell more stuff if you accept more forms of payment, right? We've all gone to the gas station, they're like, oh, we don't accept credit cards. What? Like, So the more you add, forms of payment, the better. But on the other side, if the company looks at it, once they accept it and they look at it as an investment, right, and that investment generates a return, right, then that's a good thing. But again, they're taking an insane amount of risk by holding it. I think, was it Tesla or something like that? They bought like a couple of $1 billion worth of Bitcoin and they made money. They made like a lot of money on Bitcoin.
they made their numbers
Yeah.
for a quarter on that. They didn't make their numbers on Tesla.
On
but they
cars.
made it on. And I thought,
On
well,
Bitcoin.
that's such a cheat.
Yeah.
But,
Yeah.
but it was kind of brilliant.
Yeah. So again, like Tesla looked, as an investment made billions of dollars on it. So, but remember, right now it's easy to make money because it's going up. It could have gone down, right? And you would have lost billions, and they would have been pissed, right? Like,
The thing that makes it go up is people keep buying
Buying.
it, right?
Yeah.
There's new blood coming in to buy it.
Yeah, more and more people are buying it. Yes.
What about security? Because I feel a little bit scared about buying, and then when I want to cash off, like if that company, for example, Cash App or
Yeah.
the medium that I'm using, scam me, like.
No, and that's why I'm saying, I think I would, Google like reputable, cryptocurrency applications or something like that and go to the main ones, like do a little bit of research. It'll take you 5-10 minutes. But those are pretty, like Cash App I don't think is going anywhere, or PayPal or.
The market crash. So,
Yeah.
like,
Yeah.
with the bank, you feel like there's an institution behind.
Yeah.
It's like they can respond, but with this, it's like
Yeah.
Twilight Zone. Like,
Yeah.
put your money there, but.
Just make sure you go like to these reputable places, right? Reputable exchanges or reputable applications. I think that's it, right? Yes. Thank you very much, everyone. Thank you. I truly appreciate it.